Hi guys, welcome back to my YouTube channels. For those who are new here, this is Mboa, your future CFO. And the topic that I have for you today, we're gonna be looking at journal entries, JVs. So what are JVs? Journal entries are the building blocks of the financial statements. That is where we start from as accountants. That is the starting point. You post the different transactions, the different activities of the organization into the different accounts using journal entries. So this is the starting point. You post all the transactions into different accounts. And then at the end of the month, you're able to know the balances sitting in each and every account. You get a trial balance, and a trial balance will show you the balances at the end of the period sitting on each and every account. And once you get your trial balance, you're able now to prepare your other financial statements. You're able to prepare your balance sheet, that is the statement of financial position. You're able to prepare your income statement. Then from these two financial statements, that is the balance sheet and the income statement, you're able to prepare your cash flow statement. And what is a cash flow statement? A cash flow statement will show you the opening cash position of the period. Then how did we use cash? And we have three classes of the different ways of using cash, where we have the operating activities, the day-to-day operations. How did we use cash? We use cash maybe to pay salaries. We use cash maybe to pay different expenses. So this is how we use cash in the period, in the operating activities. Then now we go to the investing activities. We've invested as an organization. Probably we bought PPE. We bought new computers. We bought new furnitures. So that is what you go into the investing activities. Then now we have the financing. How did we finance our different operations? Probably we raised money through debt. We maybe gone out to the owners of the organization, the shareholders. We've requested them to give us more money, maybe through the stock market. We've issued more shares. We've also paid dividends. So that is what you go now into the financing activities of the cash flow statement. Then now this is the closing position of cash as an organization. So basically, guys, that is how we do our financials, from preparing the journals all the way to getting the different financial statements. So I want to show you a very easy way of remembering. And if you're able to remember this, guys, it's like you've learned how to do journals. Like you were 90% comfortable with doing journals. So today I'm going to be showing you something I call dealer, where you know which account do I debit, which account do I credit. And once you know this concept, as a financial, someone working in finance, an accountant, maybe a student in accounting, you are able to post your transactions comfortably. But all in all, we say accounting needs thinking. Don't do things like a robot. Think through the transaction before you do it. You make sure that you're doing it correctly But this is an easier way of helping you to post journals in your accounts. So there's something I call dealer. A dealer shows you which account do I debit, which account do I credit. Because we know with journal entries, one account is increasing, the other account is decreasing. If a journal affects two accounts at any given time, or maybe it can affect more than two accounts, depending on the nature of the transaction. For example, maybe we bought inventory, then we paid part of the inventory in cash, then then the difference in credit. So that is gonna affect more than two accounts. But in most cases, you find a journal entry affecting two accounts. So when it comes to my dealer, what do I debit? So other dealer, we have the three accounts that you debit, that is dividends, expenses, and assets. When you pay those accounts, you debit them. Then which accounts do I credit? I credit liabilities, equity, and revenue. So basically that is my simple recipe of doing the journals. You are able to know which accounts do I debit, which accounts do I credit. And this way you posting transactions correctly in the financials. You know, we say garbage in, garbage out. So if your building blocks are not done correctly, guys, there is a problem. You're reporting your finances, your financial statements are not correctly. So we need to get it right from the journals. When we post our journals correctly, our financial statements are correct, and we are able to interpret them well. They're giving the true position. So this is the starting point. So I want us to look very fast at two examples. Then I take you through how to post these two journals. So the first example is we bought computers on credit from Dams Limited, $2,000, and this is on February 1st, 2022. So how do we post this? We have a debit, and at the same time, we have a credit. So which account are we debiting? We have an asset account, which is computer. Computer, we debit. So our computer gonna go up by 2,000, and we are crediting. We bought on credit, and this is a liability, an non-current liability, creditors. So our creditors, we gotta credit them by 2,000. So that is the transaction, that is how it's gonna affect our finances, our different accounts in our financial statement. Then the second example is we paid advertising expense to Citizen TV, $1,000. And this is on 3rd of February, 2023. Don't mind the date format. I know there are different date formats depending on where you are. Where I am, we start with the month, then now the date, then the year. So there's an account that we're gonna debit and there's an account that we're gonna credit. We are affecting two accounts. One account is gonna go up, the other one is gonna go down. So we have an expense. Expenses we debit. So we debit our advertising expense. Then we have, we paid advertising expenses to Citizen TV, and this was paid through cash. Cash is an asset, but our cash is going down, so our cash will be credited. We are reducing our cash. So here we have, maybe we can say our bank is gonna go down. The balance in the bank is gonna go down by the same amount, which is $1,000. So guys, basically that is how you do your journals. And I hope my dealer secret. It's gonna help you as an accountant, as a student of accounting, an aspiring accounting in future. And I hope, yeah, you'll be able to post your transactions better. You'll be able to post your transactions correctly. Because as I said, garbage in, garbage out. We need to make sure that whatever we're posting is clean. We get a clean trial balance. Then we are able to prepare our financial statements that are correctly for daily, for the decision making of the organization. Because if our financial statements are incorrectly, we are making the wrong decision. So let's post our journals correctly. Then everything else will fall in place. Thank you guys for following me all the way to end. Thank you for staying with me. I'm so happy. I don't take this for granted. I know it takes your time, and I don't take this for granted. Thank you so much. And thank you for staying with me. Don't forget, guys, hit the smash the button down there, subscribe, like my YouTube channel, comment, tell me what you want to hear me talk about. Thank you so much, guys. Be blessed.